Good morning and welcome to this session of the live revisionary virtual classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. In the last session, we were discussing topic accounts of companies. So I'm happy to see that many of you are back, including Mr. Nagesh Dange and Om Prakash Om Gupta. Okay, Om Krishna Om Gupta. Welcome. Let's continue. See, I have got a presentation that has about 138 slides. This is meant for my regular classes where it will be done on a longer period. This is a revisionary class. So what I'm doing is I'm concentrating on exam-oriented, important areas. So that's we may be skipping a few topics. We may be skipping a few topics. Not important topics, but some topics. So this we have seen, etc., etc. So this is something will never be asked in the thing, but I have already mentioned it to you. The difference between the two words, attached and annexed. What is attached and what is annexed? Point is, your auditor's report extends to every balance sheet and every document annexed to are forming part of the financial statement. Okay. This is something you have to try to understand. Board's report is not very important, but we'll quickly see it. So especially the content of the board's report, you are expected to know. So this is the broad summary of the contents of the board's report. So number of meetings of the board, director's responsibility report, which we will see in more detail, which is important. Details of fraud reported by auditors in case. See, it is, as you know, you will be seeing later that it is part of the duties of an auditor to report fraud. If so, those details need to be reported here. Also, every year the independent directors have to confirm that they are independent. On those criteria, they have to 169, they have to give. Similarly, comments by the board on remarks made by the auditor and the company secretary. If in case there is secretarial audit, the company secretary may have made some qualifications. Auditor also would have made some qualifications, if at all, if any. So these can be, the board can give their explanation here in this place. Any related party transactions are also reported here. And how much of the amounts are being carried to reserves and how much are being paid by way of dividend. In case the company is engaged in doing any foreign exchange or conservation of energy, technology absorption, forex, etc. See, so these are all to be given. CSR policy, the policy needs to be given here. And what have you done based on the policy? The initiatives. Later on, when you come to CSR, you will see that the CSR policy is to be formulated for certain types of companies, and the CSR committee is to be formed. So that committee would spearhead the corporate social responsibility activities, the company. The policy on directors' appointment and remuneration, any loans, guarantees, or investments made by the company, the state of the company's affairs, just the state, how it is going on. More importantly, whether it will go on, whether the company is doing well, or whether it will be a very short time before the company goes for insolvency or liquidation. Okay. Material change affecting on financial position, if at all, after the balance sheet date, we mentioned here. Development and implementation of risk management. See, business is about risk management today. So if you are running a huge business, it is not only about marketing, etc. It is about risk management. Yesterday we saw mirrored backup, business continuity planning, disaster recovery. How good are you at, how quickly can you recover? For example, COVID was a challenge. In fact, the COVID was the ultimate challenge for business continuity planning. Those companies which had a good BCP in place a BCP, business continuity plan, should not have had a problem. They should have assumed, that this could happen, and they would continue normally. So that is how it should be. See, so in fact, recently in the place uh, where I'm staying, they said there's going to be a possibility of a rain. So and big threat, all that. But my office, we are already ready for that. Said, okay, so what? Work from home. Some of us will stay back here. We'll work because work has to go on. So business as usual. So how are you handling risk? How can something unplanned affect you? How much can it damage you? The lower the damage, the better. So you may not be able to remove the damage totally, but if you can mitigate it, if you can reduce it, that is a board of directors will be measured. Their performance should be measured by that ability to be resilient, ability to because day-to-day operations are handled by professional management. If the board is going to poke its nose there, wasting its time, everybody's time, I should say, then there's no point. So the last item, the listed and other public companies having paid up share capital of 25 crore or more. We see 25 crore or more. They'll also include a statement containing the manner in which, in the format of annual evaluation of the performance of the board. See, as I told you, suppose evaluating the performance of executive management is not easy at higher levels. Still, we have certain yardsticks, certain goals, but here is a body, the board, that has to set the strategy and goal. How to evaluate that body? How effective were your strategies? How effective did you achieve them? How effectively did you put in place a process for actualizing the strategy? That is what is being evaluated here. Okay. So there are many yardsticks, many methods of doing it. Anyway. So abridged report is also possible, but they have not prescribed a format, but yet to go. Now, this is important from exam point of view. Therefore, spend a little more time on this. It's part of the director's board of directors report. There is a statement called the director's responsibility statement, which needs to be included. Idea is directors should consciously and in no uncertain terms confirm. So when he signs, the director should know that city in Tamil Nadu called Coimbatore, where I'll be here till Diwali. So this class is being conducted for you from Coimbatore. So slightly the power percussion is not very stable in this city. So I could not, I had to connect and through another connectivity. So I'm so sorry for that, the interruption. Some of you might have faced a problem. Now coming back to our topic. So we already seen this, so let's not waste our time on this. The director's responsibility statement, they have to confirm that the applicable accounting standards have been applied with, that the directors had selected such accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent, so as to give a true and fair view of the state of affairs of the company at the end of the financial year. So earlier, this true and fair view was not, earlier means I'm talking about before 90s, early 90s. True and fair view was an auditor's problem. The board of directors have nothing to do with true and fair view. But subsequently, they have ensured that directors have to ensure that the accounts give a true and fair view. It's not the auditor's job. It is the auditor's job to see whether the directors have done it. Okay. And the directors have taken proper and sufficient care for the maintenance of adequate accounting records in accordance with the provisions of this act, for safeguarding the assets of the company and for preventing and detecting fraud and other irregularities and all that. So fraud detection is the board's responsibility, first instance. But the auditor also should keep his eyes open, is what they are saying. And if you discover something, immediately report it to the management. The directors have prepared the annual accounts on a going concern basis. So, you know that. That is being confirmed here. So that tomorrow, suppose they go for insolvency, we can catch them. Hey, you said it's on going concern basis. So now you're applying for corporate insolvency. You're a corporate applicant under section 10 of the IBC, you're going. How can you do that? You can't say you're going concern and go for IBC. That means that why did you default when you're going concern? The directors in the case of a listed company had laid down internal financial controls to be followed by the company, and that such internal financial controls are adequate and are operating effectively. In fact, one important disclaimer we give in the audit report is, as you know, that internal controls are not my responsibility. It is up to the board of directors to do it. This is internal financial controls which are to be followed by the company, and those internal financial controls are adequate and were operating effectively. So primary responsibility of the it is not the auditor's job to confirm every time. I'll assume basics will be there. If even that is not there, then how? That will be a different report altogether for me. At a certain level, I can say certain things the statutory auditor cannot. Maybe the internal auditor can go. Statutory auditor cannot go into, for example, purchasing is done. We definitely, as part of the audit, we'll verify. We'll take sample 15 very randomly valued purchases. We'll try to find out whether there was expression of interest call for LOI, letter of intent, then whether that was being classified, bids, there was open tender, then bids are received, then they are open, whether at minimum at least 3 vendors are being verified, prices are being verified, then the L1 is selected, and then the L1 is given the contract, or at least you show that you got the best deal given the quality and the expectation of the company. Some justification or approval. See, these are some things that I cannot see every time. If it is there, it is there. Suppose I find a disruptive transaction, then I will go back and I find out who authorized this, how did it happen, why you are buying this at such a price, where did you get it from, who is the supplier, why only him, have you got other options, why did you not explore? Somewhere, as a statutory auditor, I have to stop there. Because I cannot question the director's business decisions. At the same time, I can point out this. But basic internal financial controls are there. So the directors have devised proper systems to ensure compliance with the provisions of all applicable laws. That all I have highlighted, all. It's not just company law. Every law known to India, you should have complied with. So you should, that's why they are saying you cannot do it. So you have to devise a proper system. The board of directors cannot do it. They have to devise a proper system, possibly by having a legal team, a company secretary to handle compliance, a CFO to handle taxation, or a taxation manager to handle taxation law, everybody. So, as usual, contravention brings with it punishment, very heavy, 3 lakhs, and for every officer, 50,000. Okay. Members are entitled to the audited financial statements. The copies of the audited financial statements, consolidated financial statements, audit report, etc., have to be sent to every member, every trustee for debenture holders. It need not be sent to the debenture holders. It is enough if you send it to the debenture trustees. Other persons who are entitled to it, okay, like possibly a executor of a will of a deceased member. Got it? Like they are all entitled to receive it. So this financial statement should be circulated not less than 21 days before the meeting. See, this topic and AGM topic will be interlinked, overlapping. There again, you will find 21 days will be given for notice. The notice for an AGM should be 21. Any general meeting should be 21 clear days. We'll see that. So when you're sending the notice 21 clear days before the date of the meeting, the point is that along with that, for the annual general meeting, your financial statement also should be enclosed. Okay? So the members are entitled to receive it 21 days before the general meeting, at which it is to be considered. For a company which is not which is not declaring dividend, or which is applying its profits to its objects. It will be wrong to say not-for-profit company. Sorry to say this. You can say non-profit company, no. Not-for-profit you can say. But even then, I would humbly beg to differ, because even that so-called Section 8 company has to generate a mild surplus for its future growth. So no company can make a loss. It will be for profit only. The profit will not be distributed as dividend. Rather, it will be applied for the objectives of the organization or the company. That is called a Section 8 company. Okay. A company licensed under Section 8, which is carrying on some important social or economic activity, benefit to society, and who does not declare a dividend, and who will apply the profits back to the objectives, to attain the objectives of the company. Such a company, certain concessions are given for Section 8 company. So they are telling it can be given 14 days before the date of AGM, right? Suppose, see, the minute we say 21 days, immediately somebody will ask, na, what happens if I cannot send it? Some problem, blah, blah. Okay. We already said it should be sent not less than 21 days. But if the copies are sent less than 21 days before, they shall, notwithstanding that fact, be deemed to have been duly sent, if agreed to by these numbers. So, if you are going to send it less than, then ensure, see, there's a separate form for that. There's a form. That form should be signed by every member, by a majority in number entitled to vote, representing not less than 95% in value of PUC. I think I have it somewhere. Let me see if I can show you. But that is for AGM charter notice. AGM charter notice. I think I have it somewhere with me. Let me see if I can locate it, I can show you. It is there, I think, in incorporation. This is a company I can show you freely, because this is a company formed by me, my company, my own, the consulting. I have 2 consulting companies. This is the second one. We changed the name from Blue Dot Consulting to Prometheus Consulting. So this is where, so that at that time the AGM needed to be held. So the notice was given, this notice, and this is a proxy form. Attendance. Route map to the venue. See. I'll just show you. These are all the various things you have to file. See, this is the consent by the shareholders for shorter notice. Okay, so this is the consent. You can see it. I hope you can see it. I so and so holding so and so equity shares in so and so company give my consent to hold the extraordinary meeting on at a shorter notice. You have to give that. Similarly, the other, that was my mother, who's no more, gives the consent. Only 2 shareholders, therefore, we had no problem there. Okay. Similarly, they have to also give. Similarly, they should give their consent. I just showed this consent form to you to show how it will be. Okay. Similarly, there is a consent, similar consent to be given. Sorry. Similar consent to be given for when the notice is sent. So, company having share capital, it should be agreed to by a majority number entitled to vote, representing not less than 95% in value of the public, of the paid up capital. So you have to see how much is 95%. That many members should agree. Also, there should be a majority in number. See, for example, if there are 5 shareholders, 3 shareholders together hold 90%. See, let us say that there are 1 lakh shares. 1 lakh shares of 10 rupees each. Okay, 1 lakh shares of 10 lakhs. Right. Out of that, 90,000 shares, that is 9 lakh shares, are held by 3 people. 3 lakh, 3 lakh, 3 lakh. 90%. Balance 10 lakhs, balance 1 lakh is held by 2 people. Now, majority number agree, but still it is not 95%. Are you able to understand what I'm saying? The total number of the total number of shares is value is 10 lakhs. Out of which 9 lakhs, I'm sorry, let me say 9 lakhs, 9L. 9L. 9L, 1L. This 9L is 3 shareholders. This 1L is 2 shareholders. Now, majority number 3. But 9L is only 90%. It should be 95%. So maybe one more guy from here has to come. Something like that. 50,000 wala has to come. Then I'll have 9.5, which will be 95% of 10 lakhs. Okay. Not less than. That means 95 and above. It should not be less than. Got it? So please remember, shorter notice. See, when you are studying AGM, please link it with this financial year, financial statements to be, because these are all a single topic. Though they are given in different chapters, conceptually they treat with the same subject. Okay. So try to remember them together. If you try to study in compartments, you might end up not being able to handle a question where they combine 2 areas. Then you have to be very careful, you have to be alert. They could give you a problem where they test your knowledge of this section and also 136 and also whatever that section is, I forget that, AGM section, where the shorter notice is also required. In the case of a company not having share capital, means a company limited by guarantee, sometimes Section 8 companies would be limited by guarantee, whatever it is, only the 1 member, 1 vote. So members having not less than 95% of the total voting power. Suppose there are 100 members, then 95 agree. Because 95 votes, no? 95 should agree. No share capital. So here is the question. Navyug Chemicals Limited, an unlisted public company, has 200 members. Its paid up share capital is 50 lakhs, consisting of 5 lakh shares. See why they make unlisted, this thing in listed company is going to be a nightmare because you cannot, they will not agree. How can you? See, 95% should agree. 95 is a huge number. Not attending and voting, entitled to vote. Please understand the difference between attending and voting and entitled to vote. So whoever is entitled to attend and vote, he should agree. Whereas for special resolution, only those attending and voting. Okay. So that is why listed companies, if you want to play this game, it's going to be very difficult. You can't play this game, period. Whereas unlisted public company, I showed, my private company, very small, only 2 shareholders. Chodia, get sign, finish it. So that we can do. So Navyug Chemicals Limited, even there, if there are some dissenting shareholders, some troublemongers, you'll have trouble. That's why they prescribed a very high percentage. So its paid up share capital is 50 lakhs, consisting of 5 lakh shares of rupees 10 each. The company is proposing to hold its AGM on 28/9/21. There was a delay in submission of accounts for audit, and hence signed financial statements are ready only on 10/9. Invariably, they'd say it is due to audit delay, but why the delay was there in the audit, they won't tell. And I came early in July, August, begged you to give. I fell at your feet and asked you, give me the detail, give me this, give me that. You are telling I'm busy, sir, we are busy, sir, like that. Now suddenly time has come, and you are saying complete the audit. I said, I'll do it. Give me the detail, I'll finish it. No, sir. Auditors are delaying it. Of course, our firm has extraordinary method of handling it. And many of our clients also, see, one more thing, we explained the logic to them. We said, look here, if you play this game, who is suffering? You. Whereas what I'm asking is not something that you cannot give or don't have. Am I asking you to go to some mountaintop and get some water from a very rare spring that you can't do it? No, yeah. I'm asking you to climb Fujiyama and there's a mountain spring there. From there you get the water. No. I'm asking you for details that you're jolly well supposed to have generated in the ordinary course of business. Summarizing it and give it to us. These are reconciliations that should have been done on a monthly basis. Fellow is lazy, he doesn't do it, sits quietly. Then at the end of the year also, at least you had a chance. In March, could have done it in April, May. When the audit starts in June, we are telling, hey, please reconcile, man. This has to be done. No, sir, I'm very busy. Busy doing what? But we coach them, we encourage them, we send it well ahead. We keep calling them, not shouting at them, but friendly way, praising that, you are such a great man. If you think it can be done, like, Jambavan will tell to Hanumanji, we will tell him, you are a big man, you don't know your own strength, like that. Then suddenly that flow, okay, sir, we'll do. Then he'll become a willing participant in this, and he will also start providing details. So then he himself will get ownership in the audit. Then he will start cooperating and start giving more detail. He will explain things also, so that the audit will get over faster. In fact, sometimes to some of my audit accounts department, not the CFO, sometimes when my people tell me, sir, this team of accounting people are a little problematic group. So I go there and I take the most problematic and I tell him, please come here, Baba. When you have a problem, the doctor is putting injection. Now, you have a choice. You keep steady, hold still, allow the doctor to search and put the injection and take it out. Painlessly, it will happen. Maximum pain-free, I can do it. But if you keep shaking, moving around, shouting, eating, then what happens? I will still injection, but it will be painful for you both during and afterwards. So please don't shake, don't keep still. Allow me to do what I want. Then go ahead with your life. You will be free. In your own interest only, I'm putting injection. I'm not getting any fun by putting the injection. Once I give this example, they'll start laughing and they'll say, okay, sir, we understand, and cooperation will come. Because sometimes I find, of course, students are very keen on passing the exam, but the real world out there is after the exam. How to handle that? Better start now itself thinking of people handling also. So the company has obtained I'm just bullshitting around because I want you to give me an answer on the chat box because you're already reading the screen now. Some of you, I hope, would have given the answer on the chat box. I came out of the query, but just give me 1 minute to go back. Well, at 2022. Correct. Itnom Gupta gives us the answer. Yes. The company has obtained from 60 members who are holding 45 lakhs, whereas 50 lakhs. So 45, it's only the similar example to what I gave. Is less than 95%. Okay. So we need a majority in number. Am I correct? Who are also 95, not less than 95. So 200 members. Now, my dear, who is that? Sai Kiran Kumar, why are you saying 190 members, sir? Sai Kiran ji, why are you saying 190 members? Because it is not 190 members. Majority in number. Majority in number here will be 101. Okay. Whereas they've got 160, which is much more than 101. So kindly understand, sir. I hope I have communicated correctly. Because if it is due to my miscommunication, then I want to correct it. Okay. So you should, they got the number correct. Members is correct. They got more than 101. But the PUC, the paid up capital value is wrong. Okay. This was a question asked in the examination for your information. Okay. So I'm just skipping this one. There's no big thing. So members are entitled to copies of audited financial statement. So anytime a member can inspect, etc. Now, believe me, this is more relevant for public companies, public unlisted companies, private companies also. Because the listed companies' financial statements are available on the website. Any listed company, if you want to know, you can go to the website. But for some useless companies, see, in fact, if the company's website does not give access to financial statement and it's a listed company, that itself should be a clear indication, hey, this fellow is good for nothing company, because he doesn't want to display or make available his financial statements on the net where it's easily accessible. He's making me send a mail to him asking. That means some fraud is going on here, something is happening. Even if you find that in the newspapers, all the big shots are writing very well about that company, still you have to be very careful because the financial statements are not being given. So a listed company should be transparent. It should be readily available. In fact, it should be available on other sites, right? So, but for unlisted companies, yes, they may not have. So, as a member, you are entitled to receive a copy. In case you ask for it, they have to give. Okay. So, every company having a subsidiary or subsidiary shall provide a copy of separate audited or unaudited statements, as the case may be, as prepared in each of its subsidiary to any member of the company. In other words, holding company ka member is entitled to a copy of the unaudited or unaudited financial statements of the subsidiary. Okay. Financial statements can be circulated in both in physical form as well as in dematerialized form. Okay. So all listed companies and public companies having a net worth of more than 1 crore rupees and turnover of more than 10 crore rupees. And I have again, sorry, I have highlighted it and I am again drawing your attention to it. And means both the conditions are to be satisfied. If nothing is mentioned, that is the real question. If in a series of list of conditions they are putting, they put neither and or. There is no or and. Then humble submission should be taken as or. You cannot put an and where the and is not there. So where there are a series of conditions between which there is no and or, no conjunction or disjunction, then you should treat it as if it is or. You cannot treat it as and. So, first of all, listed companies and public companies having this condition, you have to ask the question, shares held in dependent form. Now, this question itself is becoming redundant now because post 2019, all shares of listed companies have to be held in dematerialized form. Okay. So, technically, all listed companies have to send only by electronic mode. Public companies in dematerialized form, then electronic mode. Not in dematerialized form, then electronic mode if consent is received in writing from the member. Otherwise, you have to dispatch physical copies by post. Recognized mode is post or courier. Okay. See, gone are the days when, once upon a time I used to see two problems were there. I was buying shares, indiscriminately buying shares of companies and holding. Thereby, my portfolio was really suffering because I had some top performing shares, about 25 of them, and then these Ganda shares. So, what all money I'm making there, about 20% of that, these fellows will pull. Some of them will make losses, they will pull. Then one fine morning, I did a rationalization of my portfolio, sold off when the market was going high in 2007. I did a rationalization and I sold off all these guys fully, and I retained the gems without selling. Whatever money I realized, I put it safely somewhere. Then again, when the market collapsed in 2009, this money also I invested in the blue chip shares. So that from 59 shares, I reduced it to 31 shares. But when I had 59 shares and there was no electronic mode, every day annual report will come in that season, July, August, September, every day, they'll keep it on my table. I will throw it because in those days I used to have a collection of annual reports. But then I realized everything is going to be available on the net. Why I will retain these physical copies? And I threw them. So it is in the interest of the shareholder also to be given a copy by electronic mode rather than physical. So what do you want to do with it? Yeah. Simply keeping it. You are not going to read it. Whenever you want, you can always download it from the net for any year. In fact, if any of you is interested in doing analysis, fundamental analysis, please go and do it. As being chartered accountants, you should do it. In fact, I would even encourage you to do it. In case you have already not done it, I would humbly submit to you, you should go to the net, download about 5 years balance sheet P&L of some well-known listed company, Ashok Leyland, Dabur, non-complicated industry. Don't take ITC, Reliance and all this. They are conglomerate. Wipro, conglomerate. Even Infosys you can take. But then remember, Infosys is a specialized service industry. So you may not see many of the complications which you will see in Ashok Leyland as a manufacturing company. So tomorrow, if you're going to be employed in a manufacturing company, better go through that. It depends on what you want to do. Go through that report thoroughly once. Any report. Like that, you do 2 or 3 reports, latest reports. Your knowledge of financial reporting, company law will grow by geometric proportion, practically. And don't do it in one shot. Whenever you feel bored, Instead of going to internet, going through Instagram, you do this. That way your mind will focus on subject and your mind will be continuously in subject. See, as a CA student, remember, you cannot have distraction till the examination. You cannot have distraction till you become a chartered accountant. Any distraction you have to avoid. I'm sorry to make this comment. To an extent, this is brahmacharya. Your mind can never go anywhere. After all, if you up with this for a short while and become a member of our institute, that's a whole Alibaba cave you're opening, yeah, of riches and permanence, and there's so much happening there for the right person. Again, I'm telling you, just because you qualify, immediately don't come and catch my collar. Other qualities are needed, but once you are qualified, you are way above the normal. Within that range, between a highly communicative chartered accountant and a non-communicative chartered accountant, there could be a difference. But even the non-communicative guy who has no interpersonal skills, even that guy will be earning much, much more than an ordinary guy. And even that non-communicative, no personal skills, personality development, nothing, that chartered accountant will be earning huge money in employment. Okay, today. So forget practice, forget all that. That comes later. So that being the case, you have to sacrifice your time. And so if you want to relax, read a balance sheet, go through it, highlight it. Then when you study the subject, you will be able to relate to this. Since this is also a revision class, I'm humbly submitting this to you. Don't mistake me. But this is something that we have done in the past. Some of us super seniors used to do that. Buddhas, we are no Buddhas, we used to do that. On our own interest, we used to do that. Nobody told us. Nobody gave us the opportunity. In fact, getting hold of annual reports was very difficult in those days. We used to go beg, borrow, steal, get and read and take notes and then compare it with our studies. Thereby, knowledge became better. So, humble submission, kindly do not mistake me or to get angry with me. Why I keep telling that? Because nowadays, in the generation Z, you have to be very, very careful in what you tell to them. You should be very careful because they will get immediately, this like that. See, what people forget is today's generation Z or today's younger generation will one day become older generation. And today's older generation was once upon a time the new generation. Think about it, you will understand the foolishness of giving importance to Gen Z. See, one day the Gen Z will become Buddha, and this Buddha was once upon a time a Gen Z. in when he was 25 years old, the bull, he was going around. That man is still here. He has not died. When you think about it, today Gen Z, I'm a modern Gen Z, sir. We are all technology, sir. Right, friends. 1986 computer comes to India. We were there. I was developing software in COBOL. Everything. I grew with the computers. The systems that you see now, we saw them develop. The first ever mobile phone, which will be almost like a brick, I used to carry it around, Nokia. Okay. So just I'm telling you, it's not to say, it's not as if technology is new, just that. So think about it. So the ideas that worked in the past can definitely work in the future also. Just because Buddha is telling, just because past old idea, don't think it's not effective. Okay. Maybe yes, you have got some. See, the way you will achieve it. See, earlier I used to write in paper. I had notebook, pen. Now I do it. I dictate into my mobile. I write using a stylus on my mobile. That's it. The device has changed. But the brain and the knowledge is the same. Okay. Just because the device has changed, suddenly the brain will become better, is it? Buddhu will be Buddhu, whether paper pen or whether handheld device. Buddhu is Buddhu, but brilliant is brilliant. So the idea is not to worry about technology, but to use it and to worry more about improving our knowledge and improving the depth of our knowledge. Okay. Automatically, that the technology will be better used by those people who are more intelligent. Think about it. Okay. So the fight is still there. Technology alone cannot make fools intelligent. Okay. Or intelligent people fools. Not knowing technology cannot make an intelligent man a fool. That's all. So coming to the, I know this comment was possibly a little overboard, but I thought I would share it with you. Okay. So annual general meeting. No. See, they want to give options. They are saying you hold your AGM within the time, compulsory, but AGM is held. Then question whether the accounts are adopted. Then if the accounts are adopted, then file it with the registrar within 30 days of the date of AGM, right? Not adopted. See, it's quite possible. See, after all, preparation of getting the accounts audited and presenting it to the members is my job, board of directors. There, the members as a body may feel that the accounts they are not in agreement. So the accounts may be unadopted in the AGM or even in an adjourned AGM. Then you have to file within 30 days of AGM. You have to still file the unadopted accounts. And the registrar takes them as provisional. And further, if it is adopted in the adjourned meeting, then within 30 days of the AGM, you file the provisional accounts, not unadopted. The adjourned meeting, if you are able to get it adopted, file it within 30 days of that meeting. Otherwise, this provisional accounts will be there. But the real danger is not that. You file it, the next day, the regional director will send an inspector to your premises to ask. No, he won't send it immediately. He will send a notice asking why we should not come to verify your records. What is happening in your company? Something wrong in the state of Denmark. So this will trigger a whole lot of things. Not adopting accounts in the AGM will trigger a whole lot of activities. It shows that the company is mismanaged. So they will go for investigation also. They may. In case the AGM itself is not held, superb. Okay. They have to file all the prescribed documents together with the statement of facts and reasons for not holding AGM. Okay. It should be filed within 30 days of the last date before which the AGM should have been held. Right. Later on, you will also see annual report, which is also to be filed along with this. Again, see the parallel will be there. Okay. If I remember right, 95 section, you will see where you have to file the annual report also. So I may be wrong, section number I may be wrong, don't mistake me. Annual report has to be filed. So these are parallel. The government of India is holding 51% of the paid up equity share capital of Sun Limited. The audited financial statements were placed at the AGM held on 31st August. However, pending the comments of the Controller and Auditor General of India, the meeting was adjourned without adoption of the accounts. Agreed. On receipt of CAG comments, the adjourned AGM was held on 15th October 2021, whereas the accounts were adopted. Thereafter, Sun Limited filed its financial statements with the registrar on 12th November, which is well within 30 days. Correct? No, because the AGM was held on 31st August. Na? So on or before 30th September, they should have filed the provisional accounts. Am I correct? Then the adopted accounts. Whether Sun Limited has complied with the requirements regarding no. The answer should be no. Am I correct? Because they have not complied with this part. So kindly check it out. Mr. Sai is asking a question. Listed company only dematerialized form, sir, no physical copy. Listed company only dematerialized form, no physical copy. Where the shares are not held in dematerialized form, in the case of a public company, if the shareholder wants, they have to give physical copy. Please be clear about my answer. Listed company, no need to give physical copy. If any shareholder wants, we can send him a copy of the thing. See, Sai, you have to also understand the practical framework in which life goes on today in financial markets. See, today nobody can enter into the share market and buy and sell shares or even apply for a share in an IPO or even hold his existing shares. He has to hold it only in dematerialized form. Please understand that. Once I go for a dematerialization, I have to open a DP account. Once I open a DP account, there will be a designated email address. Automatically, when I apply for the share, the application includes a consent by me that I am ready and willing to receive all my communications and annual reports, etc., into this email address in electronic form. That's all. For a listed company, no way you can ask for a physical copy as a right. Still, if they give it to you, that's their choice. For a public company which is not dematerialized, see, for public companies also, they have to get their shares dematerialized. Compulsory. And the email address should be given. But for public companies which are not dematerialized, maybe you can ask for a physical copy. I can give. Please understand. Please understand. And also look at the broader framework within which, try to understand the broader framework within which our capital markets are operating in India today. That is more important than these type of questions where physical copy should be given. Physical copy. See, today no shareholder will want physical copy, except rarely, maybe 70 plus gentlemen will want. Even a 60 plus gentleman today can read a PDF file on his mobile or on his laptop. Maybe 60 plus. Somebody is 60 years old today, man, may, that too, not all of them, some of them, okay, may want physical copy. Okay, because they are not used to reading on electronic form. Okay, anybody who is less than 60, easily they'll be having a Kindle, they'll be having a handheld device, laptop, tab, so many ways of reading the document. Okay, so then I don't think, maybe uneducated people, even see if it's an uneducated person, even printed copy, he cannot do anything with it. Okay, no company is required to print it in Hindi. Okay, he has to read it only in English. So he should know it in English. Okay, so if he is not going to read it, maybe the company out of compassion can translate everything in Hindi and maybe give it to him. That will be better. Okay, so this we have seen. Then, so Sun Limited has not complied regarding. Right. So I'm skipping XBRL. That is one big nonsense. I'm skipping it. If you want, you can read it on your own. What is XBRL? If I go, it will be wasting our time. In case of OPC, you might be surprised to know, for OPC, they are given 180 days from the closure of the financial year. Means if the financial year closes on the closure of the financial year is 31st March, right? So from 31st March, you have 6 months. So means April, May, June, July, August, September. By 30th September, you can file your financial statements. Okay. In case the company has subsidiaries in foreign countries, the financial statement should be translated and it has to be filed. Because Japanese company may have it in Japanese. So it has to be translated and filed. Again, for contravention, there is a penalty. Can you please go through it? This is very interesting and possibly very important. Reopening of accounts on courts or tribunals orders. See, in those days, when I say in those days, I mean before 2013 Act, it was not possible for reopening of accounts. Then where did this reopening concept come up? I told you now, 2013, 2009, your so-called great, fantastic, wonderful, beautiful Satyam thing happened. And that one event made ripples, and it simply made the Ministry of Corporate Affairs, so frightened, right? The profession of accountancy, chartered accountant, we didn't react to it at all. Because we are not saying that Satyam is not serious, but we are saying Satyam is one-off event. For that one-off event, we are being punished and penalized and insulted for nothing. Because one man was either a fool or a fraud. Everybody in this profession need not be painted with the same tar brush. Okay, that is view. That is my view. View held by many people. Though they may not articulate it the way I am articulating it. Of course, we can shed a tear of sympathy for the brother in the profession who did this. That sympathy also has to be short-lived. Okay. Now, having said that, so one Satyam, the MCA became terrified, and they started. And the only way how can they, show their terror? How they can show their fear by making laws. So you see here, it's nothing. You will find in auditing so many provisions are Satyam impacted. You will find it calling for extra compliance, which will be applicable to everybody. In even good companies have to be supplied. Every company is not going to be treated as if it is Ramalinga Raju's company. Every promoter is going to be treated as Ramalinga Raju, as if he is a fraud. We have to see and we have to verify that he is not a fraud, and we have to clear it. So that becomes a real pain in this. Now, but one thing happened in Satyam. What was that? There is no doubt that Mr. Ramalinga Raju falsified the books of account of Satyam. How he falsified it is a bigger story. I don't want to waste your time. Kindly verify for yourself. Like the proverbial, or rather the parable elephant and the blind man. If you ask anybody, including senior chartered accountants, what is the Satyam scam? They will give you different aspects of the scam. Nobody knows the whole scam. And what is it? Okay. See, some people will tell, sir, there were bogus FDs, Srikanth. Some people will tell, Mr. Srikanth, there were bogus employees being pushed into the books. Some people will tell, sir, bogus sales was shown. It was a whole, everything is correct. If they are describing different parts of the elephant. But the whole of the elephant was Ramalinga Raju wanted to boost his profits. Because he had already promised a certain IRR to the investors. So to gain that IRR, he had to show one top line and a bottom line. So the profits were falsified. For that, the turnover is falsified. When the turnover is falsified, you have to falsify expense also. What is the major expense of Satyam? The employee. So bogus employee, everything bogus. And finally, the profit is arrived at. That profit is not there. So let us say I'm saying my profit is 50, only 20 is there, 30 is not there. So where will I keep it? Where will that? You can declare dividend. So that is shown as FDs kept with certain banks. Are you able to see the cycle now? Everything is wrong. In fact, that is why our past president, Padma Shri T.N. Manoharan, whenever he speaks about Satyam, he always says in the balance sheet on the left-hand side, that is the liability side, nothing was right. Left-hand side of the balance sheet, in those T form, left-hand side, nothing was right. Capital, profit, everything is wrong. Nothing was right. But on the right-hand side, he says nothing was left. It's a very beautifully, he will say that. On the left-hand side, nothing is right. And on the right-hand side, nothing is left. Means leftover. No asset, no money. The money, see, the so-called profit should be there. No, it is not there. Nothing is left. Very beautifully, he will say that. In that one line, you have to understand the whole Satyam scam. He will tell in one line in this way. And that is exactly what. But because of that one scam, the impact of that one scam is still continuing. Okay. Now, so what happened? The balance sheets duly audited and signed by Pricewaterhouse are wrong. Now, can I see the opening balances are wrong? Okay. The opening balances are wrong. So I have to correct it. How do I do that? See, now the new board of directors has come. The new management has taken over. They're trying to revive it. But still, for the next year, they can't give the old bogus accounts cannot continue. What to do? It has already been passed. The then board of directors stupidly passed whatever Ramalinga Raju told. And it has been recommended and passed by the shareholders. So there the Ministry of Corporate Affairs gave a special GO for recasting, reopening and recasting of the accounts. Special GO. But Then they decided in future, if at all the situation happens, let us give a provision to these people for reopening. Okay. So when do you reopen? I'm sorry. Order for reopening shall not be made in respect of reopening of books of account relating to a period earlier than 8 financial years. Obviously, because we are preserving the books only for 8 years. And where a direction has been issued by the CG for a period longer, then you can go back. Because CG, after investigation, may find a fraud in an earlier year. In which case, we have to go back to that year, make the corrections, carry forward, till we come to the present year. So who can do this? An application can be made by central government, income tax authorities, SEBI, statutory regulatory bodies, any other person who is concerned. An application is to be made. The application has to be made to the court or tribunal. And the court or tribunal passes an order to the effect that. See, this is where you will link it with Satyam. Otherwise, my story about Satyam, you think it's, as usual, he's telling some nonsense like that. But the relevant accounts were prepared in a fraudulent manner. The relevant accounts were prepared in a fraudulent manner. The affairs were, the company were mismanaged, casting a doubt on reliability of accounts. Only one group, one company will fit this bill today, Satyam. Is that, to my knowledge, no other company has reopened and recast. Are you able to understand? There have been frauds, but not in such a way that the accounts themselves were questioned, that the audited accounts were not reliable. That happened only in the great Satyam company, pre-revival Satyam. Before Padma Shri T.N. Manoharan took over, that was a state. Then, of course, Padma Shri T.N. Manoharan went into this thoroughly, and he along with that team of board of directors, the independent directors, they revived it. And Tech Mahindra came in, and today it's flourishing. The employees of Satyam have been saved. Okay. So the point I'm trying to make here is all this happened. Notice to be, in fact, the experiences and process that was adopted by Padma Shri T.N. Manoharan is put in the form of a book called Tech Phoenix. Tech Phoenix, which is co-authored by C.A. T.N. Manoharan and C.A. V. Pattabhiram. So those of you who are interested can read it, because it will go a long way in adding value to your preparation for the examination. Believe me, you'll find a lot of, it's written by two brilliant chartered accountants, one of whom is the past president of the Institute of Chartered Accountants in India. Try to download it and read it. So, notice to be served to the applicants and other persons concerned, then take any representation, including the company. And finally, it will pass an order to revise or recast the accounts. So, you will notice that this power is given to the tribunal or the court, as the case may be, as a judicial review. This is not something which is optional. You have to convince the court or tribunal that there is a need for recasting or reopening. Thereafter, you can do it. As I told you, this will happen when central government is investigating IT authorities. Sometimes the IT authorities may find that account, so they might apply and say, permit this company to revise. IT authorities will go on the other side. See, Ramalinga Raju increase the profit. Whereas when the IT authorities come, they will find that the profit is understated. Therefore, they will say, you revise completely, add your profit and go, because it's a corporate entity. So you have to be very careful. So the income tax authorities in the current financial year 2024 observed during the assessment proceedings a need to reopen the accounts of Chetan Limited for the financial year 2013-14, and therefore filed an application to issue an order for reopening of accounts. Examine the validity of the application. See, the problem here is 23-24. 13-14 is 9-10 years ago. Therefore, not valid. One more thing, do not confuse. See, the income tax word is used here. That is why I'm saying there is one more reopening under the Income Tax Act, which is not reopening of the accounts. It is reopening of the assessment. Please be 147 reduced 148 is a reopening, an assessment made by reopening the assessment under 148. Okay, so there is 147 assessment. Now, so that is reopening. That is also that's reopening the assessment. Wherein the old accounts only will be filed, but except that they are saying something else is there, you have missed out, please bring it. This is a case where the income tax people wanted to change the account itself. Okay. Possibly so that from that year they will change and ask the company to redraft or re-prepare its profit to arrive at current year's profit. Because they want to distribute it over the year. This fellow would have said, sir, this is not what you discovered is not 1 year profit, sir. It is profit for so many years, like that. Correct. So you go to get, but then it makes sense for that fellow to somehow push it to the later years and thereby reduce the interest burden. Anyway. So the point here is the application is 100% valid, but the period they want to reopen is beyond the limit of 8 years. Okay. Okay. Another topic that is of good interest is, let me see, 2 chat questions are there. Yeah, that was all old story. Even I got misled by that. I honestly believe that Meta's and Meta's infra and Meta's construction will help. But unfortunately, yeah, not really. There is Meta's infra and Meta's construction. There are, see, if I'm teaching you final, I will use this example to show how so-called independent directors are not independent at all. They will claim to be independent, talk as if they are big shots. But when it comes to Satyam, some of the biggest shots in the world from other universities were there. And when this Meta's infra matter came up, they simply agreed and voted. Not realizing that when you read final syllabus, you'll understand in self-paced module 186. Under 186, even one director can veto. Even one director not even voting against it. Even he has to just attend to the board meeting and refrain from voting. The whole proposal will fall. If only one of those so-called ladies and gentlemen had the guts to do that, I will say they are worthy. But after this came up, they started resigning as if they are all honest to the core. That is not fair. Okay, it's my humble view. Of course, in many times, you might see me expressing views very boldly and very. So these views are the views expressed by the chartered accountant in practice, member of the Institute of CA only, not necessarily the views of the Board of Studies or the Institute of Chartered Accountants in India. Okay. Then, of course, I'm not supposed to say something that's wrong about the institute, but about the general conditions in economy, general conditions in legal and statutory framework, a member of the institute is definitely entitled to comment about it. In fact, we are asked to comment about it whenever they want to have. See, now they are going to go for a total revamp of the Income Tax Act. God only knows what they are going to do, how they are going to create how many problems they are going to create. The so-called Income Tax Act is doing very well. Fantastic. It's a good law. Now they are going to make some real big mess. For that, they want our comment also. What they can do is they can take this existing law, see some noted anomalies or something, and then amend it. Come out with an amendment. No, we want to make our own law, new law. So let's see how beautifully it happens. One thing, there's going to be a lot of work for chartered accountants. That much I'm so confident. Because when they come out with the new law, every client will want support, every client will want advice. So one answer for us. Quickly clear and come into practice and get into tax practice by the time the new so-called new Income Tax Act comes. And let's all enjoy the tamasha and make money out of it. Okay. It should So this is about voluntary revision. Brothers and sisters, earlier it was reopening on an application by some authority. Here it is voluntary revision of financial statements. Okay. This is again 131. That is 130. This is 131, right? 130. This is 130. If you can remember the section number, try to 130, 131. 131 talks about voluntary revision of financial statements or board's report. This is done by the board itself. The board goes through its after passing, after the accounts have been passed, the board sort of looks at it, and it should appear to the directors that the financial statement or board's report does not comply with section 129 or 134. Anything 129 is quite big. It goes to true and fair. So anything that has got an impact on true and fair, you can take it up. Okay. So everything is there in 129. Okay. So now the board may prepare revised financial statement or board's report in respect of any of the 3 preceding financial years. Only 3. Voluntarily they can go. The board applies to the tribunal for prayer. Tribunal here is the National Company Law Tribunal, NCLT. National Company Law Tribunal. Tribunal shall give notice to the central government and the income tax authorities shall take into consideration the representations, if any. Okay. And finally, the government, tribunal pass an order, and that order, based on that, the accounts are revised, and the copy of order and of revised financial statement and board report should be filed with the registrar along with the copy of the order. It's a very fairly simple section. There's not a big thing. Such revised financial statement or report shall not be prepared or filed more than once in a financial year. So in one financial year, you can do revision only once. But the same year can be revised many times, but not in the same year. Okay. 1 year you can do only once. The detailed reasons for revision of such financial statement or report shall also be disclosed. But one thing, see, these are all enabling provisions. To my knowledge, they have never been invoked. Because the minute you invoke 131 or 130, you're sticking your head out of the thing. So you are being visible. And the government will want to see who you are. Who is this fellow? He wants to revise his accounts. What did you do? Like that. So makes sense to avoid. This thing is, at the time, first time itself, get it right and do it properly. That's my humble submission. Sometimes, most cases, board of directors who is bothered about accounts and accuracy? They want what they want. They want bank loan. They want to go for IPO. They want valuation. It is all. The actual accuracy of accounts is not their concern. In fact, they don't mind inaccurate accounts so long as they get what they want. Once upon a time, that was the regime where there was not so much control. Auditors used to be under heavy pressure to falsify. And ethical people used to fight, whereas unethical people used to support. That was long, long ago. Now, it is not possible to do. Forget it. It goes beyond my, I used to tell, it's way above my professional fees check. Whatever you pay me as a professional fee, what you're asking me to do is 5 times dangerous for me. Even if you pay me 5 times my professional fee, I won't do what you're asking. It's not worth it. I won't do it, period. It's not that, then I'll give you 5 times now. What I mean is, it is not worth it. Whatever benefit you derive will be nothing when compared to the problems that it has to be faced in case there is a problem. So, voluntary revision is there, where copies of the previous financial statement or report have been sent out to members or delivered to the registrar or laid before the company. The revision must be confined to the correction in respect of which the previous financial statement or report do not comply. You cannot increase or you do something different. What was it that was non-compliant? Now you can make it compliant. So, the making of any necessary and consequential alteration. Okay. So, the central government may make rules, etc. in this connection. So, Now the time is something like 12:16. We have till 1:30. I would like to skip NFRA because NFRA doesn't directly come. But still, what I will do, I will quickly tell you what is NFRA, and we will see which are the companies coming under NFRA. As I told you, the post Satyam again. NFRA was very much there in before Satyam. But post Satyam, after the Satyam scandal took place in 2009, they suggested something called a National Financial Reporting Authority for the first time. 2013 gave the regulatory framework, and finally in 2018 NFRA came. Okay. Before that, you had the National Accounting Standard Board, NASB, which was there, which was sort of, the institute had its own accounting standard board, and then recommendation, the NASB would sort of monitor and give, for the purpose of making them mandatory under the Companies Act. So accounting standards were basically our responsibility. But now NFRA wants to play a bigger role in the way the profession is going on. So it wants to be the body that makes recommendation to the CG in formulation and adoption of accounting and auditing standards. But who will prepare them? Only CAs do, because nobody else can do that. The NFRA, with due regards, cannot prepare because the professional body only can do that. It is like, see, if whether a medicine can be prescribed or not, only whether a medicine can be prescribed or not can be decided only by a medical council, which will again rely on the report given by a research laboratory. So it cannot be casually done. It's a professional thing. Okay. A bureaucrat, definitely the health ministry will have a major role to play. But finally, whether this is correct or not, only a doctor will decide. Similarly, whether the legal point or not, the lawyer can decide. So we are the professionals who can decide. The bureaucrat cannot tell us what, but once we do it, he can take it over and he can try to present it, etc., to the central government. And they can monitor and enforce compliance with the standards, oversee the quality of service of the professions, and suggest measures required for improvement. See, this was a role that we were doing as an internal self-disciplinary mechanism. Now the NFRA is going to now take it up, perform such other functions, etc. So the NFRA is here to stay. Nobody can take away. The NFRA also has the power to investigate into professional misconduct. Earlier, it was only our disciplinary committee that did it. Now, where a company will come under NFRA, the auditors, if there is any misconduct, the investigation will be conducted by the NFRA. Okay. So they also very clearly said, where the NFRA has initiated an investigation, no other institute or body shall institute or continue. Okay. So remember, this is applicable only where the auditee should be an NFRA company, NFRA bound company. Then the auditor, if any misconduct, NFRA can investigate. Yeah. NFRA is a quasi-judicial body with the same powers as a civil court while trying a suit. Various powers are there which it can exercise. In case professional misconduct is proved, then NFRA can have the power to impose penalty on the partners, and in case of individuals, 1 lakh, 5 times the fees received. In case of firms, 5 lakhs to 10 times the fees received. They can also debar the member from being appointed as an auditor, internal auditor, or valuer, minimum 6 months to a maximum period of 10 years. Of course, NFRA being a quasi-judicial body, you can go on appeal against that, not to the NCLT, because NCLT and NFRA are parallel bodies. You go to NCLAT, the National Company Law Appellate Tribunal. This is very, very important. Companies in respect of which NFRA may exercise its powers. So only these companies, NFRA will come. The rest of the companies, no NFRA. Okay. So listed companies, all listed companies straight away NFRA. Even unlisted public company having paid up capital greater than or equal to 500 crore, turnover greater than or equal to 1000 crore, outstanding loans, etc., greater than or equal to 500 crore on 31st March in the previous financial year. Please note it, friends. This is as on 31st March of the previous financial year. Right? Not on the day they reach, but on 31st March. Insurance companies, banking companies engaged in the generation or supply of electricity, bodies corporate or companies referred by CG to NFRA in public interest, though they are not coming under these criteria, they may be referred by CG because CG has done some investigation and finds that there's something wrong here. And the amount, maybe this guy is a sort of a in-between man for a bigger fraud. So he also should go under the NFRA. Bodies corporate registered outside India, which are subsidiary or associate of A to D. Okay, there is a body corporate is registered outside India, and this body corporate is a subsidiary or associate company of a company or body corporate registered referred to in A to D. In which case, the income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income or consolidated net worth of the body corporate. So, you are having a holding company in India. There is a subsidiary. The net worth of that subsidiary exceeds 20% of the consolidated income of such company. Meaning, we take the holding company and all its subsidiaries, we consolidate the net worth and see whether this fellow's net worth, the subsidiary's net worth, will exceed 20% of the consolidated income. Right? So, this is recommending of NFRA, punishment, everything. NFRA has a lot of powers. Okay. NFRA will also have to prepare accounts. These accounts will be audited by the CAG. And those accounts, audited accounts, together with the audit report will be, every year the CAG will prepare, the NFRA will prepare an annual report. And that along with this annual accounts audited by the CAG has to be forwarded by the NFRA to the central government. Then, as I told you, they will also prepare an annual report. This will also be forwarded to the central government. So, the annual report, together with the accounts, audited accounts of NFRA, in the CAG's audit report, will be placed by central government before both the houses of parliament. What is the significance of this? Anything that comes before both the houses of parliament or even one house of parliament is a public document. Every citizen of the country has right to see it. It will be printed in the official gazette and it will be available on the website of the central government. If you want, you can go and ask for it, they have to give it to you. In fact, the proceedings of the parliament are public. As you know, you can watch it on TV continuously, it's going on TV. Whenever the parliament is in session, you can watch it. They cannot, the ministers cannot say, no, this is very important affair. You people, you citizens of this country have no business to know what you are doing. No way. We elected you and sent you there. What you do, we are entitled to see you there. Such transparency is part and parcel of the democratic process. So this report becomes a public document, which means only you can have a look, public can have a look, but protected means ordinary person, like you have a look. Press will also have a look. They will take it with us. That's it. So that is what we have to be careful. We're talking in parliament. That's why you start in parliament to become for unlisted company, all three. Good question. Let me check on. Good question. Even if one of these do you remember what I told you earlier? Do you remember when I said there is no or and, we have to assume that it is or. The minute you say or, that means even if one condition is satisfied, it will come under the NFRA. So all need not be satisfied. If they wanted all, then they should put and here. Okay. So they are not put and. That means even if one condition is triggered, it will be done. So that is one. It's a good question. Rising out of a valid doubt, which I hope I have no reaction. Right? Accounting standards, you are all aware, yeah. So, my humble request, can we have a small break? Now the time is almost 12:30. With your permission. Sir, small break, sir. Thank you. break, because occasionally we need to take a break. You should also take a break. See, this is 2.5 hours. Now, the normal time for a human being to listen and absorb, psychological studies have shown clearly 90 minutes. Every 90 minutes, attention span is gone. So you should also structure your work in such a way that your timetable 90, of course, for a CA student, the concentration ability will be slightly higher. But even you have a limit. So 90 can add another 30. So that's about 120 minutes. That's about it. Means 1.5 hours plus 2 hours. There's a limit. Beyond 2 hours, if you study continuously, the absorption will be very low. So don't do that. Rather give, the best thing is 90, 90, 90. With a gap of 10 minutes to 15 minutes, just walk around. Change the subject. 90 minutes, one subject. Another 90 minutes. Suppose one subject needs more, 2 hours. Then stop. Theory subject, 100% don't study it continuously. Chunk it. But every day study all the subjects. Do not study one subject, then finish it, then another. No. Study all the subjects every day. Or at least 5, 3, 4 subjects every day, alternate. Timetable should be like that. So these are all suggestions in case you want to write. I'm sure you are already doing it. Also, I find, depending on your ability, in those days I used to get up early in the morning. Nowadays, as I become older, I find I'm convenient in the nights. It's easier for me to, sleep late. But it's better to get up early in the morning. Early in the morning when you can do accounting, accountancy, all that, the brain-related topics, costing and all that. Thereafter, I can do a little bit of law. Then in the afternoon, when you're a little more relaxed, you can do income tax and, like that. So plan like that. Theory. Don't study theory when your distractions are there, because you'll never remember. Study theory in the morning and or in the evening, 6 to 8 o'clock. Then there is a time when you have to study law. Okay, moving on. So we go on to another possibly very important topic, which is corporate social responsibility. From social perspective, corporate social responsibility is definitely important. But from a, shall we say, exam perspective also, it is important because frequently questions are asked. Testing, this topic is frequently tested topic. We call it FTP, frequently tested topic, FTT. No, so basically what is CSR? CSR is different from charity. Company may do charity, okay? We may give to some trust, something, whatever, donation. CSR is different. Okay? It arises from a fundamental concept. Bottom line, as a free market capitalist, I will never support a socialistic framework where somebody is given something based on need and not based on performance or merit. Sorry, this is a very fundamental principle. But still, there are situations where there are a set of people who need our support. For example, in Chennai, there is a school near my, not near, a little bit near my residence, which is, the economically weaker section of society come. So what I do is I give the children, once they finish the +2, they go for college. Every year I take up 5 to 6 of them. And we give them a scholarship of 10,000 rupees per person per year. And they can come and take it every year till they complete the college. So this is something I've been doing through my foundation, Blue Dot Foundation. We do that. Plus, the school also wanted to develop a toilet block. There was no toilet for the children in that school. It was a lousy place. So, of course, I contributed, and through other charitable bodies like Rotary and all, we built a toilet block. Why I'm saying this is, the people who did it were all businessmen, professionals and businessmen. From their own pocket, from their own money, we did it, individual own money. But when you come to company, please be careful, because that money does not belong to the MD or the board of directors or even all these. It is a collective money. You can't take your own decision because I like, see, suppose I'm running a company, I can't take the company's money and may use it because companies must make profits and maximize shareholder wealth. That is the goal of a company. Any other goal is a wrong goal. We have to make profits first and foremost because that is why you are there. If you want to do social service, go form a Section 8 company or form a trust like I have done, a foundation, money into it, give it to people. Then put your own hard and earned and taxed money, you put in that as a donation, give it to people. Okay, you can't take a company's money and do charity work. Okay, but as I already mentioned, educational assistance, helping some disaster relief, where people are suddenly struck by a disaster, helpless, helping them. So they are deserving matters. I'm not all saying charity or we should not do charity. I'm saying companies cannot make that as their main goal or say our goal is to do CSR. No. But this is not to say that this is their only goal. They owe a duty to serve the communities and society within which they exist, function, and derive the sustenance for their growth. See, if they fail to fulfill this duty, they will be no more than a cancer that destroys the very thing on which it feeds. See, Ratan Tata goes to erstwhile Bihar. No, sorry, not Ratan Tata. Ratan Tata's great grandfather goes to Jamshedji Tata. Grandfather goes to Bihar, erstwhile Bihar. Okay, now it's called Jharkhand. And he sets up a steel plant. Now, he could have easily made money and come out of it. No, rather he sets up a whole city there, which is called Jamshedpur. He gives them infrastructure, schools, colleges, hospitals. The growth of the steel plant automatically grows the community. So that is one example. That is why Tata Steel, in their advertisements, used to say, we also make steel. And that's a bigger span. Not everybody can do that. But still, there may be certain things you can do. Very important point, which you will be seeing is also stressed in the law, is that CSR money should be spent in and around the geographical area where the company operates. And the CSR should accrue to the public at large and not necessarily to those who depend on the company. Definitely, the people who live in Jamshedpur, a substantial portion of them would be Tata employees. But there are other people also who get benefited by this. Tata Group is a classic example of how CSR should be done. The model is there. They have their own policy framework beautifully. Tata Code is also there. They are also a good example of corporate governance, etc., etc. So, if rightly applied, CSR can be an engine driving the economic and social upliftment of society, if rightly applied. But unfortunately, no. Nowadays, it's not rightly applied. Okay, but still, it's coming to the point. How did the Ministry of Corporate Affairs address this issue? Immediately, they said, CSR, everybody should do it. Their fundamental principle is voluntary. The entrepreneur or the board should, of its own free will and accord, decide to give back. You cannot force him to do charity. But classically, the lawmakers have decided to make it compulsory. So, CSR is now. So, as far as we are concerned, the mundane topic we are going to, because if you want me to talk about CSR, I can talk for 45 minutes easily and give you easily 7 examples of how companies have helped the immediate vicinity and how they have uplifted the vicinity around the factory or the office easily in India and abroad. Okay, especially today with microcredit and women's self-help group, there is so much that a company can do without reducing its profits. Can actually, in a way, increase its profits because there are so many things. That's what I tell you. We keep telling you this now, it will become an example after example will come. I'll give you one example before I move on sustainability, where there is not CSR, it is sustainability story. where there's a cement company called Orient Cement. I went there for conducting a team building workshop for their senior management. When my usual practice is whenever I'm free, I go around the facility. So I told them, "May please show me your plant." They showed me around. They said, "We'll also show you the mines." So the program got over around 4 o'clock. Sun was still there, being near Ramagundam, Thadepalligudam. So we went up. It's a dry area, limestone area, where they get it now for the purpose of making cement. So we went to this quarry, and there I found that they have made a beautiful. See, they have to dig into the ground, open cast, and they have to take it out. So that will destroy the geography, the place environmentally. No tree, nothing can grow, and you'll have a huge depression there where you have pulled out of the earth. That depression, they have naturally collected natural water, stored it. It's like a beautiful artificial lake. And from there, they have piped the water. And that water is used in the factory because cement factory needs a lot of water, including for spraying on the plants. Because, the cement is a dust. And one problem is airborne dust causes lung cancer for people who work in cement industry. All proven. So how they are controlling it? Continuously 4 times a day, water is sprayed so that the dust settles on the leaves of the plants. Then the water, the water takes it away to drainages where they are treated and sent out. So is this CSR? No, this is not CSR. First of all, make a distinction. We'll say why this is not CSR. But is it a beautiful example of sustainability? Yes, it is. No doubt about it. It's a classic sustainability methodology of sustainably protecting the environment, even though you are forced to take away, give back. But later on, I'll show you that this example is not a CSR. Okay, I'll show you. But it's a good one. It's a good idea. And I keep repeating it not only to students like you, but also to corporate audiences who don't know what is sustainability. I'll tell them, this is what sustainability is all. Sustainability should happen casually. You shouldn't force yourself. There's no need to force yourself to be sustainable. We do things that are natural and be sustainable. Okay? Plastics are not natural. So do something that's natural, avoiding plastics. Then automatically you are sustainable. Anyway. So going on. Coming to the mundane issues. Every company should every company which is governed by Section 135 should form a CSR committee. Okay. So that is the basic rule. A CSR committee has to be formed by those companies that are for which it has been prescribed. So first question would be whether this company comes under the CSR framework or not, for which they have a criteria based on net worth, turnover, and net profit. Okay. So this is applicable to every company, including its holding, subsidiary, and foreign company having its branch office in India. Okay, for a foreign company, the net worth, turnover, net profit, etc., shall be computed in accordance with the balance sheet and P&L account prepared in accordance with Section 381 and Section 188. That is, companies incorporated outside India also need to file a P&L balance sheet with respect to their Indian operations. Right? Now, let us only see activities which are not considered to be CSR. Because what is CSR is contained in Schedule 7. That list is a mundane list. You can read it. What is not CSR? Activities undertaken in pursuance of normal course of business of the company. Are you able to understand? Our friends, the Orient Cement, what were they doing? They had a quarry. In that quarry, they put that water they took and they sprayed it on the leaves, on the dust. And the dust settled on they had a lot of greenery. That's one more thing. The entire plant is green. So when the water is sprayed, the dust settles. And the water also goes to the plant. The plants are watered, the dust is settled, then the dust is taken. Wow. And the green ensures that the heat is reduced, because normally cement plants will be very hot. That one plant, it's very cool. Okay. So it's a Birla company, I'm sure, fantastic company. They're doing very well. But then This cannot increase their profit, but some portion of it will increase their profit in terms of so the activities. First thing is activities which are undertaken in pursuance of normal course of business of the company are covered. Similarly, of course, COVID-19 related activities done in a designated research and development facility are exempted. Okay, but now COVID itself is history. Corona is history. COVID is history. It is a mystery, which is a history now. Okay, where it came from, what it did, really was it serious? Was there such a need for such an overreaction to it? So that history, that mystery is now a history. We will not bother about that. Such research and development activities shall be carried out in collaboration with any of the institutes, etc. And so COVID-related activity carried out in a designated institute. Not the pharma company cannot say I'm doing COVID-related activity. No. Any activity undertaken by the company outside India. Okay, so now you are saying, sir, we want to do CSR in Sri Lanka, sir. In Sri Lanka, in Kilinochi, there are a lot of people who have lost their limbs because of things. So we want to go there and rehabilitate them and give them livelihood. It's a fantastic project, not CSR under the Companies Act. It is CSR. Normal CSR definition it will come, but Companies Act, sorry, no, it is not. It is because you are doing it outside India. You do the same thing in India, no problem. Outside India, no, because reason is, why should, see, this is meant for supporting India. Why are you going to Sri Lanka and doing? No. So it will not be considered as valid CSR. Well, the only exception is where what your CSR activity involves supporting sports personnel, representing. There is also one of the CSR. Later on in Schedule 7, you will find training to promote rural sports, nationally recognized sports, Paralympics. So in that category, if you want to do, and you are sending that person outside India, and that person represents state or union territory at national level or India at international level, and you want to send him or her outside India for training, that will be done outside India. It's still that is taken as CSR. One exception, otherwise no. If you got fantastic, see, if you want to go to Cambodia and help them, you can. Please go ahead and do it. But sorry, will not be counted as CSR under the section 135. That is how I'll put it. Contribution of any amount directly or indirectly to any political party under section 182. Baba, 182 anyway covered elsewhere. And not only that, whatever contribution you give to a political party without any limit, income tax benefit is there. You can take. I don't know if you know that. 80JJJ something, some nonsense section, where you can take completely, full amount you can take benefit, actually. So, this, I don't want to go there at all. Charitable contribution, ETG, if you really calculate, finally you'll get 50 paisa benefit. The fellow would have contributed 50,000 rupees. Finally, you'll get 500 rupees. You'll say, sir, I contributed 50,000. I was told 50%, that is 25,000. No. It is further restricted to 50% of the 10% or 50% of the gross total income, which is so low for you, man. What can you do? Go. So that is ATG. Charity is restricted and controlled. Political contribution, any amount you can give, we will take it. But whatever it is, contribution to any political party is not a CSR. Any activity benefiting employees, not a CSR. See, you are doing eye testing for all your employees. Very good. It's a good employee welfare, not CSR. Okay. Activities supported by the companies on sponsorship basis for deriving marketing benefits for its products or services. Sponsorship. Okay, where there is a marketing benefit, which is why many times I want, boss, you want to book CSR, please don't put your company's logo on it. The minute it is there, it is marketing. If it is marketing, it is not CSR. Okay. Without all that, you have to do. Where you're carrying out any activity for fulfillment of any statutory obligation. For example, under the Factories Act, you need to set up a shelter for lady workers. You do that. That is not, first of all, it is employees, and it's also a statutory. Similarly, and for protecting the environment, under the environment law, you have to put up certain, drainages and all sluices, should ensure that it doesn't disturb any known water source and all under the Water Pollution of Control Act 1974. In 1984. In response into that you are doing. You are not doing benefit to these villages here. If you don't do it, you will be punished. Therefore, you are doing. Therefore, that is not CSR. See, I'm not going to waste your time going through Schedule 7. Please read it on your own. And most of the items are here. Okay. In fact, once one of our clients, listed company, wanted to know whether they can support a Goshala. Can they support a Goshala? So then I said, ensuring environmental sustainability, ecological balance, protection of flora and fauna, animal welfare. So here immediately I got animal welfare. Cow is an animal. Welfare of the cow. Go Rakshana. Go for Go Rakshana. That's all. Okay, maybe if the Prime Minister gets this idea, he will make it into a slogan. Na? Go for Go Rakshana. Okay. So all of you have to go Rakshana. So agroforestry, etc. Also Clean Ganga Fund. All that. So animal welfare. So like that, in later life, if at all this issue comes, you should remember. Schedule 7 contains the list of items which are this COVID-19 is a big bore, I say. Now, very, very important. I cannot overstress the importance of this slide. Take a photo of the 500 for it. We don't take it inside the exam hall. That is not it. You will be disqualified. Okay. So, but what this brings me to another concept from exam preparation point of view. I used to prepare. See, my slides are basically summaries, but I used to have one more further summarized cue cards. I used to prepare and keep it with me, topic wise. For all subjects, I have a notebook I used to have. Nowadays, I use cue cards for my classes. When I was a student, I was a poor man, I had no cue card, and also I had to have notebooks. So notebooks are there. So one notebook will be only for company law. So last minute preparation, I will do only from that notebook. There are two benefits. One, Mr. Sai was asking how to remember. When you read from the same source again and again, the remembrance is more. So I used to write down and then reading only from that. So that again and again, when I look at it, the memory becomes more. These are all psychological approaches. If you want, you can use it. But you have to do it. Without doing, if you say like that, nothing. Do it. Instead of how to do, if you're asking, no. I'm giving so many ideas. Implement them and see how it is. So the CSR requirement is net worth of rupees 500 or more, turnover of 1,000 crore or more, and net profit of rupees 5 crore or more. So 500, 1,000, 5. During the immediately preceding financial year. Okay, shall constitute a corporate social responsibility committee. So any company that crosses this has to complete, whether it's listed or unlisted, it doesn't matter. It has to comply with this. If it is less than 500 crore, even a listed company need not constitute CSR committee. Got it? So every company, the net worth is more than 500, or so the or is very clearly given here. Or even one condition is triggered. So if your turnover is touched 1,000, I'm not a listed company. No, sir, sorry, you have to go. But if you're not satisfying any of these conditions, then you need not have a CSR committee. Okay. The profit calculation for this purpose, will be, you can exclude two things. One, profit arising from any overseas branch. Why we are excluding it? Because then not allowing you to do outside India, na? Therefore, that profit you exclude it. If you use that profit for your overseas CSR, if you have any overseas branch, you got money there, you have your own factory in Cambodia or Thailand. Agreed. You make money there. Profit is there. On that, I will not ask you to do CSR. That compulsory CSR percentage, I won't apply on that. So that profit you use, portion of it, for doing corporate social responsibility in Cambodia. the dividend received from other companies covered under and complying with the provisions of Section 135. So finally, you get the net profit for this business. Net worth definition you have already learned. Simply for the sake of knowledge, I am putting it here. Because this was must have been learned by you in preliminary. Thereafter, the word net worth will be used again and again and again. That's why they have defined it in Section 2. One important exclusion, never ever forget that. Revaluation reserve not to be included. Securities premium can be included. All reserves created of profits, securities premium account. Okay. And debit or credit balance of P&L account. Everything can be included. For including CRR. CRR can be included for net worth. Because capital redemption reserve is created out of profits only. Except that statutorily it is not available for declaring dividend. Please be careful. Capital redemption reserve is not a free reserve because it is not available for declaring dividend. But it is includable for the purpose of net worth, right? Securities premium account not available for declaring dividend, but included in net worth. CRR and securities premium can be used. Securities premium, of course, use it for so many purposes, 3, 5 as the case may be. But capital redemption reserve can be used only for issuing fully paid up owner shares. So RERA Limited, a company incorporated under the Companies Act 2013, having paid up share capital of 10 crore, turnover of 100 crore, net profit 3 crore, and securities premium INR 300 crore. So net worth, so we are seeing net worth 500, turnover 1000, net profit 5. So here, paid up share capital 10, securities premium 300, together 310, turnover 100 crore, net profit 3 crore. This is not clear. The CFO informed the directors that the CSR committee is required to be constituted. Directors seek your advice. What is your view? So 300 plus net profit 100 plus INR, there is turnover is 100 crore, net profit 3 crore, net worth is 310 crore. Sorry, not 313 crore. I'm sorry, 313 because net profit also can be taken now. Net profit is the balance in the P&L account, right? So that is taken. That is paid up share capital plus net profit plus securities premium 330. Still, it is not touching 500. So RERA is not fulfilling. These are extracted from financial statement of ABC. See, very, very important. As on 31/3 balance sheet only you have to see. You should see as on 31/3. During the year, if any change has happened, you cannot. Net worth is less than 500. Turnover is less than 1000. Net profit less than 3. But during the year, on 39, turnover has gone to 1000 and net profit has reached 5. Still, you need not constitute. What you need to see is only during the immediately preceding financial year. So ABC is not required to constitute CSR committee. Okay. Now, every company which ceases to be a company covered under one of the Act for 3 consecutive financial years can stop till such time it comes. Why 3? Because we are going to see the profits of the immediately 3 financial years they can take, average. Therefore, they say for 3 years you continue. Continuously for 3 years you have not satisfied the criteria, then at the end of the 3rd year, you are out, you are free. Where the amount to be spent, I will show you that, then it will be easier for me. Yeah. Yes. The board of every company required to form CSR committee shall ensure that the company spends in every financial year at least 2% of the average net profits of 3 immediately preceding financial years. So you have to take the profits for 3 financial years, total divided by 3. average. On that, you have to calculate 2%. Okay. This is the amount you are required to spend. When that amount you are required to spend does not exceed 50 lakhs, you need not constitute a CSR committee, and the board of directors itself can be the committee. Okay, that is what they mean. I'm skipping a little because this is all pure theory. There is nothing, no meaty stuff here. Okay, so the company can engage international organizations for designing and evaluation of CSR, but it can also collaborate with other companies. So two companies can come together, pool their 2%, but they should be in a position to report separately on such projects. Okay, separately how much you spend, how much he spent. One more thing is possible. There could be a project that is going beyond 1 year. It's called a multi-year project for maximum 3 years. The timeline cannot be more than 3 years, in which case you are allowed to carry forward. But you should declare an ongoing project before, so that in 1 year you declare it, you will start spending. You need not fulfill your obligation in that year. You can go on for 3 years, but at the end of the 3 years, you should have fulfilled your obligation. See, this year there may be 2%. I have to spend. Just now I have started the project. There's no need now, but next year I'm going to spend more, so that it will get merged into the next year's 2% plus this, like that. So no problem. If you got a multi-year project, please go ahead. Okay. Now, where the company has not completed 3 financial years, then just whatever is during the immediately preceding financial years, you have to take the average of the immediately preceding financial years. Preference shall be given to local area and areas in and around where the company operates. Statutorily, 135 says, this is statutory, not compulsory, but shall be given, they say. So we should concentrate on local area. Companies may build CSR capacities of their own personnel also, but be careful. The administrative overhead, that is the non-expenditure overhead, the money that is actually spent on the project for the beneficiary versus money that is spent on accounting, monitoring. That monitoring and accounting, etc., cannot exceed 5% of the total CSR expenditure. So if the total CSR expenditure is 2 crore, then only 5% of that you can spend as 10 lakhs only you can spend as administrative cost. Okay. So this is what we have seen. So Tirupati Limited, a listed company, has made the following profits. Profits reflect eligible profits, we can be sure. So they have given for 5 years. So we need to take only for 3 years, the last 3 years, 70, 30, 40. Okay. Sorry, 50, 70, 30. 50, 70, 30. Total 150. Divide by 350. Into 2%, 1 crore. So 1 crore is the amount that can be spent towards this. In case you are not able to spend towards CSR, no problem. You can specify the reason. And if unless the unspent amount relates to any ongoing project, then you have to transfer that unspent amount to the fund. Under Schedule 7, they have established a fund. Within a period of 6 years or 6 months of expiry, you have to transfer it. In case you are having some activity, CSR, that generates revenue and there is a surplus, that surplus cannot be taken to the business profit of the company. It should be plowed back. In case you're not plowing it back, it should be transferred as unspent CSR. In case there is excess expenditure, this year I spent more than 2%, then it can be set off against the future up to immediate succeeding 3 financial years. But the excess shall be set off, not include surplus arising cannot be set off. But surplus, if you are not able to spend in the same year, you have to transfer it. But any other excess amount which is not spent can be carried forward and spent. The board of the company shall pass a resolution to that effect. Mary Limited is a listed company having a turnover of 1,200 crores. The CSR committee of the board formulated and recommended the company finalize the project which required funds at 5% of average net profit. Will such expense be accounted? Yes. See, this is basically not a problem question. This is a theory question. Answer is here. Mary Limited has spent in excess of 2%. Okay. Such excess amount may be set off against the requirement to spend. Okay. Advise the company. Answer is, that's all. This is the answer. You'll get 3 marks. The answer is this slide. That's all. You can also have capital expenditure. I told you, the toilet block that we constructed. Suppose that had been done by, in fact, we were trying to get CSR for that. But I think some CSR came. One company gave CSR funding also. One portion of it, I think 10 lakhs of the total 50 lakhs, I gave about 5 lakhs that I know. Some more people gave. 10 lakhs came from one corporate. I think Shivnadar or somebody. Okay. I didn't track it. I gave my money and then I monitored from the other end. I was not fundraising. I said, look, don't even come to me. I've given my 5 lakhs. You guys collect it and do it. Because you want to take the photograph, you collect the money. I don't want to stand in the photograph. You stand, you take the photo. So long as the children get the toilet, I'm happy. That's all. So, the CSR amount may be spent by a company for creation or acquisition of a capital asset. Now, that capital asset should be held by the company. See, if you create a capital asset, that capital asset you should give it to another Section 8 company for that purpose, or registered public trust, society, or whatever it is. In case of unspent amount, remaining unspent relating to any ongoing project, okay, it should be transferred within a period of 30 days from the end of the financial year to a special account called unspent CSR account. Then from that, it should be utilized within 3 financial years. If not, then from the expiry of the 3 financial years, within 30 days, it should be transferred to the fund specified in Schedule 7. This is only for ongoing project. Okay. Until no fund has been established, it will be transferred by the company to any fund included in Schedule 7. Okay. We already saw the board's report should give details of the CSR policy and the initiatives. In case you are having a CSR obligation of 10 crore rupees or more in the 3 immediately preceding financial years, then there should be impact assessment for those projects which are having outlay of 1 crore rupees or more. Suppose the company is doing many projects. Okay. Their CSR obligation is more than 10 crores. Obviously, then they'll be spending huge. So each project, wherever the one project budget goes beyond 1 crore, then impact assessment should be done by a competent NGO. And that cost also will be included in the administrative cost. Okay. So, any expenditure which has been made towards impact assessment will be added to the CSR expenditure to the extent of 5% of the CSR. Up to 5% you can use for impact assessment, or 50 lakhs, whichever is less. So all this is we've seen. In case there is a default, there is as usual, punishment. Okay. So this is as far as CSR. CSR is a very interesting topic, but it's not complicated, but not required. Correct. It's okay. Fairly simple topic. Accounts is fairly simple topic. There's no, shall we say, complication here. So, internal audit has been made compulsory. See, earlier in the Mao, as it was called, we used to mention one line. The internal audit, the company has an internal audit commensurate with its nature and size. It's all. Now they've said, boss, if you have got a certain size, jolly well have to have compulsory internal audit. So listed company, compulsory internal audit. Unlisted public company, paid up share capital 50 crores or more during previous financial year. PFY means previous financial year. Turnover of 200 crores or more. Outstanding loan or borrowing from banks or PFI, public financial institutions, exceeding 100 crores or more. Outstanding deposits of 25 crore or more. Or, even if one condition is satisfied, you have to have an audit, internal audit. See, invariably, this thing, we will inform the company. Or maybe there's a company secretary there, I will tell him, Mr. Company Secretary, come here. Have you examined 138? Oh, sir. Then I'll say, boss, your turnover is more than 200 crores. Oh, are you having internal audit? No, sir. Go and tell your MD to have internal audit. Sir, already even for you, he is telling, why should I have an auditor? How can I have internal auditor, sir? No, that's a statutory complaint. Tomorrow, if you're not doing it, as a company secretary, you'll be in trouble. So he'll go and report. Then the MD will call me, say, Srikanth, what is this? One more additional expenses you're pushing on to us. Said, sir, I am not pushing, sir. The Companies Act is pushing. So they will hire somebody to do the internal audit. Private company, even a private company where the turnover is 100, 200 crores or more, or outstanding loans and borrowings from banks or PFA exceeding 100 crores, there should be an internal audit. See, if properly done, internal audit is a fantastic early warning mechanism, provided there is an independent audit committee to whom the internal auditor can report. I have been internal auditors in such circumstances where the CFO and other people and even the operational people will be shivering when my report is going to the audit committee, because they will know this guy is going to point out things that they are aware. So which is why they will call me beforehand itself and talk to me. They'll say, Srikanth, sir, you know the position law. I said, look here, if I don't report, I'm in trouble. You will report. You give solution for it. Agree. You do. In the audit committee, don't fight it. You agree. Yes, sir, it is like that. Tell the reality. Tell the market reality. Tell what is it that prevents you from complying with the requirement of control systems. Okay. And why you are breaking it. Nataraj Limited is an unlisted public company, paid up capital 80 crores. During the turnover of the company is 110 crores. No. Should this company have mandatory internal auditor? This type of question asked 4 or 5 times. Similar question asked 4 or 5 times. So, turnover 80, that is crossing the limit. Therefore, share capital, paid up share capital crossing the limit. I think 50 crores is pretty low, but they have fixed it. So, Nataraj Limited should appoint. Similarly, they have asked, is a listed company having a paid up share capital of INR 25 crore. Okay. Paid up share capital less than 50 crore. Turnover 100 crore, less than 200. The company secretary that it is not required to appoint. Hello, brother. Unlisted company only, all these things. Listed company, every listed company should have a internal auditor. Like that, we have to tell him. Sometimes, these company secretaries, you should be very patient with them. You should pat them on the back, make them feel happy, and then tell them what you're telling is wrong, and don't tell like that. Otherwise, they'll get offended, hurt, or feel depressed. So better you keep them in the good humor. So the similar, yeah. Okay. I told you, I have only selected 3. There are easily 7 or 8 times they have asked this question. Who can be internal auditor? Chartered accountant, cost accountant, other professional. Who? God only knows. Even, okay, cost accountant, I will give him that much credit. Net accountant is the best. We are the most suited for audit. Okay, because we possess wide knowledge of everything. Right from accounting, finance, costing, income tax, GST, everything we know. So we are the ideally suited. But cost accountant, yes, in a very drilled down way, especially people with experience, operational, they can come out with some good findings. The internal auditor may or may not be an employee of the company, may or may not be. So employee can also be. It need not be an outside firm. Okay, it could be an individual or a partnership firm. The audit committee will appoint the internal auditor in consultation with the board. The internal auditor is appointed by the board on the recommendation of the audit committee. Okay. So, great. Let us see. If you have any more queries, see, to my knowledge, my dear friends, this could be this is the last class between us. So I really thank you for your extraordinary support, for your participation in our deliberations and questions raised by every one of you. I'm wishing you all the very best in the examination and so that you can clear the exam with very high marks. Thank you. Thank you very much, Mr. Gupta and others for your kind words. So having said that, I think the time now is 13:25. If you have any questions, you can ask. If you want, you can unmute and ask. Another 5 minutes, I can take questions. Thanks to everybody. Thank you very much. Shall we please close the session? Sir, class session over, sir. Thank you.